Welcome back. In the last video, we imported the club's full financial history, contributions, loans, income, and expenses going back to 2022. At the end of that video, I mentioned that the club's financial picture would become more complete once we added the club's assets. In this video, we are going to add the club's assets. We are also going to spend some time on reports and the audit log. So, what is an asset and why does it matter? An asset is anything of value that the club owns. This could be physical, like a piece of land or equipment, or it could be financial, like shares in a company or a bond. Assets represent part of the club's wealth that is not sitting in a bank account. The club's cash balance tells you what is available right now. Without logging assets, there is no breakdown, and the balance sheet shows that the club has investments, but you cannot see what those investments are, what they are currently worth, or how each one is performing. Logging assets gives you that visibility. Each holding is named, valued, and tracked individually. How do we log assets in Fundify? I'm going to head into the finances section and open the market investments tab. Then I'll click add asset. The form asks for the asset name, the type, the current value, the cost basis, and the date of purchase. It also adds an option for adding a description. For the current value and cost basis, the system gives two ways to enter the figures, and depending on the asset type, it will default to the most appropriate way, i.e. the total value or total amount and the units times price. Let me walk you through each asset so we see how to fill in the form. Let's start with shares because they have the most moving parts. Shares represent ownership in a company. Let's say that the club bought into a company at a certain price on a certain date. The total amount paid is the cost basis. That figure is fixed. What changes over time is the current market value of those shares. So under type, I'll select equity. Because equity is the kind of asset that tracks unit, the form automatically switches both the current value and cost basis sections to units times price mode. If I enter the number of units and the price per unit, the system computes and displays the total in real time. Let me log the first holding for the Compounders Investment Club, and that is Umeme. So the name, I'll type Umeme. And for cost basis, I'll enter 6,529 units. And the cost per unit when the club was buying was 300. The system computes the cost basis as 1,958,700. For the current value, we still have 6,529 units, and today's market price is 63. The system computes the current value as 411,327 shillings. And for the purchase date, I'll enter the date that the club bought these shares. Let's say 2023, March on 16th. I will add asset. So when I do that, the system immediately shows an unrealized loss of 1,547,373 shillings. This is the difference between what was paid and what the holding is worth today. The second holding of the club is Bank of Baroda. I will add asset again and Bobu, abbreviation for Bank of Baroda, and the asset type will remain equity. And the cost basis, the club has 140,000 units that it bought at 15 shillings. The system computes the total cost basis to 2,100,000 shillings. The current value, the shares are still 140,000 and today's price is 54. The computed current value becomes 7,560,000 shillings. And the purchase date, still 2023. And that's June on 14th. I'll add asset. On Bobo, the system shows an unrealized gain of 5,460,000 EGX. So what does unrealized mean? The club still owns both of these holdings. It has not sold them. So the gain on Bank of Baroda and the loss on Umeme exist on paper. They reflect how the investments have moved, but no money has come in or gone out of the club yet. If the club were to sell, they would realize an income on Bobo and a loss on Umeme. An unrealized gain means the investment is worth more than what was paid. If the club sold today, it would receive more than it originally invested. An unrealized loss, on the other hand, means the investment is currently worth less than what was paid. The club has not actually lost that money yet because it has not sold, but the position is in the red. As the market moves, the admin updates the current value using the update valuation option on the asset. So let's say Bobu, you use this icon for edit and you have update market value, record purchase, record sale. We shall choose update market value. So the system offers 3 ways to update your market value. The first option is total value. Here you enter the new total value of the holding as it stands today. The second option is change amount. Instead of entering the new total, you enter how much the value has moved, using a positive number to increase it or a negative number to reduce it. For example, if the holding has gone up by 500,000 UGX since the last update, you enter 500,000. If it has dropped by 200,000, you enter negative 200,000. The system will apply that movement to the current value. This is useful when you know the movement, but not necessarily the new total. The third option is the unit price. With this option, you enter the current price per unit, and the system multiplies it by the number of units that the club holds to calculate the new total value. This is the most natural option for shares. You just have to enter the price per unit and let the system do the multiplication. So let's say that from the last time we updated for Bobu, the price has moved from 54 to 49. There is a change of 700,000 since last time, and then the date and then record valuation. The unrealized gain has reduced from 5,460,000 to 4,760,000. Note that whichever method is used, the unrealized gain or loss recalculates automatically. If the price has moved in the club's favor since the last update, the unrealized gain increases. If it has moved against the club, the unrealized loss grows or an existing gain narrows. The balance sheet reflects the updated position from that point forward. The next asset we are going to log is a bond. A bond is essentially a loan that the club has made to a government or a company. The club lends money and in return, it receives regular interest payments called coupons over a fixed period. At the end of that period, the original amount is returned in full. Unlike shares, a bond does not appreciate or depreciate in value under normal circumstances. The club knows exactly what it will get back and when. The return is in the interest, not in the price. So I'll add asset again. And I'll enter the name as, and the asset type will change to bond. I'll enter the total amount the club invested as the cost basis, and that's 10M. And the same figure as the current value because the bond is fixed and will be returned at face value when it matures. I'll enter the purchase date. Let's see, that was last year in September 9th. And then I'll add my asset. In case the club buys another bond, the admin can record the second bond the same way, but with a different name and maintain the type as bond. The coupon payments that we talked about that are received by the club as regular interest are recorded as income in the finances section and feed into the club's profit calculation. The bond itself sits on the balance sheet at its cost value. Next, we will log the club's unit trust holdings. A unit trust is a pooled investment fund. The club puts money in and a professional fund manager invests it across a range of assets on the club's behalf. Unit trusts work differently from shares. The value does not move up or down based on a market price. Instead, the fund earns interest on the money invested, and that interest is added back to the principal at the end of each period. At the end of each period, say a month, the fund manager sends a statement showing the updated balance. So for Compounders Investment Club, I'll add assets, and for the name, I'll add Sanlam, and the type, I'll add unit trust. It can either be unit trust or money market, or you can even create your asset type. I'll enter, for the cost basis, I'll enter 6,467,101 shillings, and that will be both the cost basis and the current value. Since they match at the point of entry, there is no unrealized gain or loss. I'll enter the purchase date and I'll save. So let's say that was at the beginning of the month. And then I'll add asset. Let's say that later, between the beginning of the month and today, the club adds more money into the Sanlam Unit Trust. I'll go to edit the asset. And instead of update market value, I'll record a purchase. And the amount invested is 2 million. And the purchase date is today. I'll confirm purchase. Confirming purchase raises both the cost basis and the current value by 2 million. So the two stay in sync and there is no unrealized position. The new balance will be 8,467,000 shillings, but with zero gain or loss. I'll log another unit trust for the club the same way. I'll add asset, and that is SBG. The type is still unit trust. The amount is 6 million. 669,516. And that is the same as the cost basis. And purchase date, let's say at the beginning of the month. And then we'll add asset. So let's say instead of investing more in the unit trust that we withdrew, and that the net withdrawal was 1,500,000 shillings, I'll go to edit asset, and instead of update market value or record purchase, I'll go to record sale. How much we received when we withdrew was 1,500,000. How much did we buy this asset at that we are selling at 1,500,000? Still 1,500,000. We are not making any profit on the sale. And the date is today, so I'll confirm sale. So that leaves the net investment of the club in SBG as 5,169,516 shillings. Both unit trusts show that we have 0 as gain or loss, which is right. There is no unrealized gain or loss because the cost basis and current value always move together. The balance goes up when money goes in and down when money comes out. If we wanted to delete an asset, how would we do that? Let me go to SBG. I click the edit icon, and then I would choose delete asset. And then I would delete. I'm not interested in deleting, so I won't click. This option should only be used if the asset was recorded in error. For an actual disposal of an investment, the correct approach is to record the sale, so the history and any capital gain or loss is captured properly. With all the assets now logged, the sidebar shows the full breakdown of everything the club holds. This is our sidebar. So we have cash, outstanding loans, and each individual investment with its current value and unrealized position where applicable. The club's holding in Umeme is currently worth 411,327 shillings. That is the full picture of what the Compounders Investment Club holds. Now let me open the balance sheet report, because this is where everything comes together into a formal financial statement, and that's in reports. The balance sheet is built on the most fundamental equation in accounting. Assets is equal to liabilities plus club equity. In plain terms, everything the club owns must be funded by something. Either it is owed to someone else, that is a liability, or it belongs to the club, i.e. equity, and that is the money that the club has made. On the asset side, you'll see cash, investments. Investments is the lump sum of the assets we have logged. You'll also see loan receivables. Loan receivable is either loan principal receivable or interest receivable. These figures are informed by the active loans held by members from the club. On the liabilities side, you'll see member deposits, and on the equity side, you'll see retained earnings, which is profit not distributed to members, and unrealized gains, which is the difference between what the club's investments are currently worth and what was originally paid for them. One thing worth understanding is that the system automatically adjusts this cash figure to keep the books balanced. Every transaction that flows through, a contribution received, a loan disbursed, an expense paid, an asset purchased, has an effect on cash, and the system accounts for all of it. Because of this, the cash figure on the balance sheet is a useful check. It should always match the club's actual cash position, the sum of physical cash on hand, mobile money balances, and bank account balances combined. If the balance sheet cash figure and your actual cash do not match, that is a signal to investigate. Something may have been recorded incorrectly or a transaction may have been missed. Get into the habit of checking the cash figure whenever you review the balance sheet. If the cash balance reconciles with what you have in your cash balance, you're confident that your books are accurate. Let's move on to the reports. Let's start from the bottom. The loan report. This shows a summary of the loan activity. How many loans disbursed in the reporting period, how many have been repaid, and if there are any defaulted loans. The contribution report shows monthly contribution totals for the reporting period. So since our reporting period is this year, which is January 1st to April 19th, the breakdown for January is 399,000, and same for Feb, and then less money received in March so far. Member allocation. This report shows each member's share of the club's total capital for the reporting period. What makes this report insightful is that it goes behind just savings, and it includes any profits that have been distributed to each member as well. The column shows total capital, which is savings plus distributed profits. And from that, each member's percentage share of the whole is calculated. If I were to change the reporting period to all time, the member allocation would answer the question of, if the club were to wind up today, what proportion of the assets would belong to each member? And that is provided with these percentages. So let's move on to the income versus expenses breakdown. Let me generate the report for all time. On the income side, we will have loan interest, which is generated automatically as loans accrue, fines revenue, which is also generated automatically as we log payments, any other income such as unit trust income, dividends, interest on debt securities, other. If you've got any capital gains from an asset sale, that income will also reflect here automatically. On the expenses side, we have everything that the club has paid out, e.g., transport, brokerage fees, admin expenses, etc. The difference between the total income and the total expenses gives you the club's net income for the period, and that could be a profit or a loss depending on how the reporting period went. As you've seen, we can generate reports for different periods. The ones that are built in are this month, this quarter, this year, last year, and all time. But if you want a specific period, you can use this calendar and set the date that is starting the period and the date that is ending the period. So for example, let me do from April last year to April this year. And then apply. One important distinction: the income and expense report shows what the club actually earned and paid. The unrealized gains and losses on the share portfolio do not appear here because no money has actually moved. These sit on the balance sheet. When the club eventually sells these shares, the gain or loss becomes real and moves into the income and expense report for that year, and the cash changes accordingly. So the income and expense report tells you what the club has earned and spent in a given period. The balance sheet tells you what the club is worth at a point in time, including the current value of everything it holds, realized or not. The income report tells you what happened. The balance sheet tells you where things stand. So you can generate these reports for any period you want by playing with the calendar here. One more thing to look at before you wrap up this video is the audit log. Every action taken in the system is recorded here automatically. I will go to the audit log, which is this. It is the club's complete paper trail and it covers every domain: assets, contributions, payments, loans, fines, expenses, profit distributions, document settings. For each entry, the log shows who performed the action, what the action was, which category it belongs to, and the exact date and time. I'm going to sort using assets, which we've just logged, and I'm going to go to assets. And if I'm to choose one activity here, I'm going to go with this. It shows that we created an asset named SBG and the value was this and the cost basis was this. This is useful for tracking investment activity over time. If the club bought Bank of Baroda shares, then sold a portion later, then revalued the remaining holding, every one of these steps appears in the audit log as separate entries. Asset created, asset purchased, partial asset sale, asset revalued. The full transaction history is there without having to piece it together from memory or on a different record. The same applies across everything else. A payment recorded, a loan approved, a fine waived, a setting changed. All of it is time-stamped and attributed to the person who did it. For a club with multiple members and an admin managing the day-to-day, this level of transparency is important. You can also use the date to sort. So we can say which activities have gone on this year and to today. And this could be for maybe loans. In this video, we logged the club shares, bond holding, and unit trust holdings and walked through what the reports are actually showing and what the numbers mean. In the next video, we move into day-to-day operations, what the club admin does week to week or month to month to keep the club's records accurate and up to date. See you later and thank you for watching.